Gotcha. There we go.
That's a scary voice. Stephen Hawking kind of stuff we got going on here. This was the wrong recording.
Good morning and happy Friday, everyone. Stephen Lung here with Ampersand Accounting. This is Peter Mantell, as usual, founder and CEO of Ampersand Accounting. And today we have a very special guest with us. We have Ken Helms. Ken is a very, very tenured individual with a rich history, extensive history, both in the public and private sector, as a sales tax auditor with the Illinois Department of Revenue. His field experience includes sales and use tax, telecommunication, excise, and hotel/motel excise tax review. In addition to in addition to field experience, Mr. Helms worked with the Technical Services Division, where he was responsible for issue-specific research and write-up. Ken moved to PricewaterhouseCoopers as a senior associate, and with PwC experience, this includes merger acquisition review for internet companies, manufacturing, telecommunications, and excise tax. Ken has moved to Intercontinental as a senior analyst responsible for all transactional tax audit work. Ken was then promoted to a manager and then director with responsibilities for transactional taxes, excise taxes, occupancy taxes, local business taxes, license and permits, and all real and personal property compliances. Mr. Helms has received his CMI designation for sales tax from IPT, the Institute for Professionals in Taxation, and is also a member of the CMI Designation Committee. Ken is an active IPT instructor for the Advanced Audit Management section and a regular speaker for sponsored events in symposiums, Tax Academy, and on the ABA IPT Symposium Committee. So, Mr. Helms, thank you very much for joining us today. You are a fountain of knowledge, and we wish to drink every drop of what you have for us.
Okay. Well, I hope everybody gets a little bit of edification, because this is a very, very scary subject we're about to approach.
Absolutely. So, Peter, if you're ready to share the slide, go ahead and fire that up. Okay. Otherwise, I'll go ahead and start off with what Qui Tams are.
Yep, go ahead. That's good.
Alrighty. So Qui Tams is the accepted abbreviation for the phrase. This is a Latin phrase that it stems from, which is Qui Tam pro domino regequam pro se ipso in hac parte sequitur. And the literal translation of this expression is, he who sues for the king in this matter as well as for himself. And the meaning of this expression is that the party bringing the action or information does so as much for the king's as his own personal interest. So, gentlemen, clue us in on what that means. How can we explain that in layman's terms?
Ken, you want to first stab at it?
Oh, sure. What Qui Tams? Well, Qui Tams originated, believe it or not, and Peter has the slide on it. It goes back to Abraham Lincoln. That's how far back in history you can go back to. And what it is effectively what we would call a whistleblower statute today. Qui Tams allow for private individuals to step into the shoes of a governmental entity, political subdivision, if there is a fraudulent claim, misuse of governmental funds, anything where government property, title, any kind of tangible value has been misappropriated, fraudulently billed. You see a lot of these in, say, Medicare, Social Security, that type of thing. And the benefit to these types of transactions is the fact that the states have adopted, there is a federal Qui Tam provision as well. False Claims Act is another name for this. But it allows not just the ability to bring forth information, but it also provides protection generally for the person who brings the action forward. Sorry, does that make any sense to everybody?
Complete sense for me. And
Absolutely.
let me break it down a bit further, actually, to what Ken said, getting even nerdier, if you would. When it comes to the Qui Tam component, I mean, originally this was utilized for profiteers of the Civil War era, to what Ken was saying, specifically individuals that approached local government and said, look, we can help your troops provide some kind of military support in exchange for compensation. During the Civil War era, it was pretty disorganized. And so at a later time, trying to figure out what funds were dispersed and not properly or accurately completed with or complied with, in which case then they had expanded it to the broad stroke, if you would, in relationship to letting private individuals be able to take entities or individuals to court on behalf of the US government, which is just a little more oversimplification of what Ken was stating. So the from here, the original Civil War era False Claims Act remained largely unchanged until 1943, when the U.S. Congress enacted the Important Amendments law to the law. I'm sorry. So what we saw, and Ken, feel free to chime in here on this. We saw that post Civil War era, and then after that, it kind of slowly died out as the military requirements and transparency got a bit better. The necessity to hunt down individuals that had profiteered from these types of situations had at this point become null and void. 1943, they began to utilize it a bit more again, bring it back into the fold, if you would.
Right. And yeah, and again, we're talking about America during World War II, where there is, a lot of governmental funds being spent and being spent without complete oversight because of necessity. One of the amendments and what it did, and this is very important to, it's very, very relative. One, there's a weird term, and of course it's a legal term, so any lawyers here, I apologize, but it's a realtor and related. And that's the name for the individual or the person bringing suit against someone else in a Qui Tam action. So that term's going to come up, and it looks weird, but that just means the plaintiff, to make it easy.
Thanks, Ken. Appreciate that.
So
good, Stephen.
Oh, pardon. So with repurposing an old world policy in the new world, the False Claims Act, the federal government's most potent Qui Tam mechanism, expressly excludes tax fraud from its scope. So recognizing this gap in coverage, the Internal Revenue Service has instituted a whistleblower program that pays individuals for bringing information on tax fraud to the individual of the to the attention of the service. A small number of states, on the other hand, allow Qui Tam suits alleging violations of their tax laws. So this places a lot of people, a lot of businesses in a very sticky situation. Correct, gentlemen?
Yeah, absolutely. And what I would say is that, one thing, we're going to get very into the nuts and bolts, specifically in Qui Tams in this current age and time and what we've seen recently, but an oversimplification of what is occurring right now is that if, in fact, or when these states are enacting False Claims Act provisions under tax components, the issue that now occurs in all this is that we are now seeing it broadens the scope of what can occur. So audits are much friendlier when it comes to, dealing with back owed versus Qui Tams. And the reason is that you're not going to be questioned by an auditor. You're taken to court, which means right out of the gate, you have fees. This isn't just an accountant fighting, with the auditors. This is a legal battle that you're going to have to fight in your own behalf to protect your assets and revenue owed that the state deems is theirs. Ken, go ahead.
Well, and that's critical. These cases as we move forward, they can become, at a certain point, potentially frivolous. You can. I think one of the big concerns we have is that in this environment where it's, the methods and the way businesses are transactioning today, leave potential gaps and leave potential, I'm going to get you my competition. Qui Tams, if not properly oversighted, can become a method of damaging competition. And that's, and like to Peter's point, it's not necessarily adjudicated amount due. It is the cost to prove or cost to defend. And unfortunately, in an audit for transactional tax, this is one of those areas where you're almost guilty until proven innocent, and it's a real fight. And the attorney fees can become tremendous on defense, and even if you win, you may not get those fees back. So it's something you have to be very cautious about, and from a business perspective, ensure that whatever you're doing gets the proper attention, and processes and things are locked down so that you don't trip into inadvertently, because we'll get to them, but some of the names that have been taken in Qui Tams are AT&T, Walmart.com. My Pillow has been obliterated lately. So these are companies that are not just, small regional. These are big companies that, and they've lost. Okay. It's not that they won, they lost. So, as a small business owner, that puts some fear into your back a little bit. I'm sorry, Peter, go ahead. I went a little too long.
No. I like that. That was all very good, Ken, actually. And to what you're saying, I mean, this is reminiscent, Ken, if you remember back in 2018, when we got approached by a consortium of suit manufacturers in Illinois. It reminded me, what occurred for the viewers out there listening. So a Qui Tam in Illinois, who Ken will go into much more depth as to who he was, also known as the Qui Tam King, began to find ways to exploit under Illinois' False Claims Act different e-commerce entities. And specifically, what this Qui Tam had done was they had gone to an event, trade show or an event where they were all present, these vendors, for 4+ days. They shook down the event for the information under the pretense that the event would be on the hook for all the sales tax, in which case the event gladly turned over all seller data. Then from there, all these clients got subpoenaed and stayed, invited to come to court to defend themselves in Illinois in relationship to the False Claims Act and potential sales tax they had not collected from certain events or from other clientele in Illinois. To say that this was one of the more difficult battles that we've had, or information-wise, what we had to do to even get to that juncture, is an understatement. I would prefer an audit any day of the week versus having to deal with Qui Tams or getting that information together for them.
Absolutely.
And some of the statistics that we have here relative to Stephen B. Diamond, the king of Qui Tams, actions reflect a lot of the financial impact that was felt, including the $29.3 million in proceeds and attorney fees for the state and for himself that were achieved through his law firms that negotiated over 370 settlements. The amount of these unpaid taxes in dispute is estimated by taxpayers upwards of $6.7 million. We're looking at average settlement payments by defendants nearly $80,000, $79,089, not including amounts paid for legal representation, and settlements ranged as high as $6.3 million to as little as $500. Illinois' share of these settlements totaled $17.7 million, and the Illinois AG office, their share of settlements was about $2.9 million. Defendants paid Illinois $45,000 in attorney fees and costs, And Diamond's share of these settlements totaled $5.7 million. So it's no wonder that he's king of Qui Tams right now, with especially when he's got $5.9 million in attorney fees and costs, and 78% of these settlements involving, involved. Oh, it looks like we have a question coming in. Let's see here. We'll get to that in a second.
Yeah, Stephen, I think it's, one of the numbers that's not there, and I apologize, guys. Yeah, he settled 371. He filed over 900 Qui Tam actions.
That's great insight, Ken. That's great insight. That's supreme insight. And thinking about how much he's attacking that, it just shows the tenacity of him just pursuing these Qui Tam provisions.
Hey, Ken, all these numbers sound great. What does it mean for a small business, though?
Well, and I think we may have skipped a portion here. One of the why Qui Tams are so dangerous. You see some disparity. It doesn't make sense that they settled for 29.3 million, but the tax owed was 6.7. Qui Tams effectively treble what they estimate to be due. So that means whatever you owed, they're going to multiply it by 3. So your liability, that's why the business liabilities are so high, based on, and I say only, but $6.7 million. So even if you get a $50,000, you owed $50,000 in tax, that becomes $150,000 immediately, and then attorney fees, and then, right?
Yeah.
So that's the danger here. Is one, cost of defendant, and it's the hazards of litigation is the term that should be used here, and it's a term of art, which means it could go either way. Let's just settle this thing, and that's why he has such a high rate of settling these things, because their clients, the defendants could be hit with 3 times what's actually due.
And to add to that, Ken, I would also say that, in light of marketplace facilitator and these very large marketplaces that we see today, they don't have a fight in the game. They don't have a dog in the game except for their own entity. And we've seen in prior years, California, CDTFA, where, and Stephen probably knows this better than anybody, where they had subpoenaed Amazon to turn over all third-party data, which is now public record within the California system. All it takes is for a Qui Tam to request under the Freedom of Information Act all that data that California has stored, and then all of a sudden the dominoes start to click. Boom, 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 boom. Because under Freedom of Information Act, the state has to turn that information over. It doesn't take anything. Now all of a sudden you're dealing with lawyers versus accountants.
And it's also important to note that the king of Qui Tams filed not only on behalf of his clients, he filed as a realtor. He filed himself. The law firm filed. Okay. And Stephen and I, back in our days of the dark side, Stephen had experienced what they called desk audits. So Stephen would basically sit at his computer all day long, looking and trying to find people who were either not charging the right amount of tax, not charging tax, had come into Illinois with different ways to find some nexus and to initiate an audit. There are people who do nothing all day long, then get to checkout on .coms and see if the tax is right. Okay. And we'll get to, there's an even scarier side of Qui Tams, because the revenue for fees is so potentially high that this can trigger other issues, other legal issues, but we'll get to that.
Another fun little example I recall from a client, Ken, toy manufacturer with the state of Washington, if you remember that one. And what had occurred here, and this is how simple it is, an auditor was just walking down the Costco toy aisle and just grabbed random small name products in Costco that this manufacturer had sold into. immediately requested additional detail information, because in Washington's case, as an example, Washington does a lot for, has provisions in relationship to go after income tax, but also if you have wholesales into the state of Washington greater than $250,000, then the state expects and requires you to report your wholesale transactions. And that's how these people got caught. Yep.
Right.
So,
the B&O.
So from a creative perspective, when the question is, how does a small business get popped? It is not complicated. There's many different mechanisms and levers you can pull on. Here's another fun one. Are you guys marketing? Are you selling into specific markets? Because guess what? Auditors and Qui Tams use the same Facebook that you're advertising into. And they're just sitting there looking at the same news as you're offering. So from a small business perspective, if you're doing anything to be transparent, to gain clientele from a marketing perspective, you will pop up on the radar.
And as a former collector for sales and use taxes back in my day, I can attest to exactly that. We will use any resource that we can get our hands on to identify any sort of marketing that your business might be employing. In fact, just because you know this now and decide to take it off of your website, don't think that covers you either, because the state does utilize, or at least has utilized, the Wayback Machine. And for those that aren't familiar with the Wayback Machine, you're able to go back and look at what a website looked like at a previous date in time, and see that at that point in time, they did advertise this or that, they did say this or that, and we'll use that against you.
Understand one thing I want to point out here to the viewers that are listening in. You are getting perspective from two different state auditors from two states that have recently incorporated the False Claims Act with tax provisions. So this field knowledge is directly what they've done in the past. I know for a fact, Ken, you've written some of the playbook on how these audits would go about, including our friend, Mr. Buffett. But, it's one of these things that, you have to be extremely cautious. And this is where we recommend you tread lightly. I'll tell you what, let's keep this thing going. Ken, let's go into the big cases, kind of just to show some examples of how states have made examples of bigger corporate clients and what they've done. I think this is going to be very insightful as to part of why the clients need to understand they're at risk.
Okay, and to the audience, I have, it'll either come in as an attachment or it will come out under a separate header. I pulled the FCA provisions, or the Qui Tam provisions, for New York, Illinois, and California, so you can read. Illinois and California are almost verbatim, okay? They are non-specific as to indirect taxes, sales and use taxes. New York actually has a carve-out protection, believe it or not, New York, of all places. If you don't make at least $1 million a year, and that's not in California, or there's a $350,000 tax due minimum, you can't get sued under Qui Tam. Okay. Illinois has no specific language that says sales taxes are included. Guess what? They've been doing it since 2001. Okay. And now you've got legal precedent. So until somebody legislatively turns that faucet off, it will keep going. The concern now is California. California has this same gap. And the problem is that they define, what you can file a Qui Tam action on as governmental funds. Sales taxes, use taxes are governmental funds. They simply are. They're more geared towards a trust tax, but they're still governmental funds. And that's opened the door. And because of the fact that the code provisions between Illinois and California are so similar, you can use other evidence, supporting evidence that Illinois allowed Qui Tams to move forward. So anyway, let's start with a simple issue back in 1999. Two people in Muskogee County, Oklahoma, found out and discovered that AT&T was overcharging on the local rate, not the full state rate, the local rate, which is 1 to 2%, and tried to get their money back. AT&T said no. They took them to court. 2 people, 1999. Well, they finally settled a multitude of cents for $1 billion, and it covered 27 other states. Okay. So if you get a flyer saying, hey, I think I got overcharged tax, look at it, fix it. Don't let that critter out of the gate. And like I said, this is just this case alone should, put everyone on notice that a simple miss of one single point of a local rate ended up being $1 billion. So
I'm reminded of the movie Office Space, Ken. And if you remember, they were taking a fraction of a cent.
He missed a decimal point. Yeah, 300.
The next thing you know, it's a multi-million-dollar. Yeah.
Got $350,000 for the weekend. So anyway,
so
that's go ahead, Peter.
No, I was going to say, but that's exactly how simple it is. I mean, it's as simple as 1/10 of a cent. But when you do it over millions and millions of transactions, that number begins to add up really quickly. So it's one of those things that I think you have to be cognizant of, and kind of actually brings up another thing, Ken, I didn't think about, but a Qui Tam or a client can just walk into your store or your e-commerce store and buy something. And then they have a receipt that breaks down the tax, and they can compare that receipt against what should have been charged.
Right.
And there's your case.
You can go to a brick and mortar. Right. You get a brick and mortar, and what you got on e-com. So that's the one. And we cited this case, so you can go find it and look at it. And just like I said, it's one, and I know several people at AT&T. I know their assistant VP of audit, Scott Adams, and no, he doesn't write Gilbert. His name is Scott Adams. He and I taught at the school, and this is one where, and I will take a step back, and I do apologize for those e-com that are in marketplace. If Amazon, you're using the Amazon calculations, Amazon is using Vertex, okay? Vertex O, I believe. I know the guy who oversees their global indirect tax function, and you're going to be you're pretty safe, okay? My concern is that if somehow you're using the transactional level detailed data and then running it through somebody else's tax calculation engine, you could be wrong, okay? You could be wrong. And that is a very, very scary issue. And it's going to be on the local rates. And it could be as simple as a rounding error. They didn't round per the code or per the regulation provision. They used an extra decimal place, so they left off a decimal place. And you've opened yourself up to something like this. Okay. I mean, that's really on this one. I think if we continue to move forward, so we give time for Q&A.
Sounds good. Ken, do you want to go into the this part?
So states are beginning to broaden scope to cover sales tax. And what we have here on June 10th of 2020, California State Assembly approved AB 2570, legislation sponsored by California AG Xavier Becerra, seeking substantial expansion of the California False Claims Act. Among other things, AB 2570 would give the AG and other local prosecuting authorities the power to pursue tax fraud cases under an enlarged 10-year statute of limitations, subjecting violators to severe punitive penalties with serious financial and record-keeping implications for businesses operating in California.
Right. And one of the provisions in there is that It also depends on if someone who knew this happened has 3 years from the date they knew to bring forward. Otherwise, it's out of statute. The 10-year provision applies to nobody knew, right? And it was kicked over by an audit or something else, by a third party. Okay. Like I said, there's a couple of, there are 2 different statutes floating around within the code section. You'll see that in it's section 2651 and 12652. Those are the code sections I've copied and will be available to the attendees.
Can you guys see? I've incorporated it here. Ken?
I see it.
Yeah. Yeah. So, I mean, like I said, it's not overly complicated. A lot of it has to do with the procedure side of it and notification and whether or not, and the other thing I think we missed here, and again, let me take a step back. In these states where there's an FCA provision, the Attorney General, the state can take over the Qui Tam claim. Okay. And you still get, there's still awards, monetary awards for the person who originally brought the Qui Tam, but those rates are reduced. I think if you bring forward California's is anywhere from 33 to 50% of the Qui Tam judgment. I think it drops 15 to 25 if the AG takes over. Okay. The AG doesn't take over, they decline to prosecute. That doesn't mean you as the individual cannot continue to proceed. And I think there's one more thing to understand here is the person bringing the suit does not generally incur out-of-pocket costs because there's a contingency fee based. It's almost like accidents, right? If you get hit by a big truck, no money out of pocket, we'll get our cut on the settlement. So it's not costing the person who's bringing the action any money, in effect.
And it's interesting, Ken, because as you read this, the 12651 form, the Qui Tams are being given guidance as to how they can go about pursuing this. So it's pretty clearly written here from California, the rules of engagements as to how they can go about bringing your business or your entity to the state and presenting it. There's no de minimis per se that I'm seeing here, other than we get into a couple of these, but outside of that, you know, you're at the mercy of the local state laws and government, which protects and shields the Qui Tams in this one.
Right. And again, from the 3 states that I pulled and made available, New York is the one that I think it was in 2010, they brought forward the legislation to put a special provision in for sales and use taxes. So,
are you talking about 13-187-194?
Yeah, I think so. Yeah. It's in there. Yeah, it's that one. There's, I think if you go to 194C, 4A, 4C, sorry, it's in there, but it's very plain. They do a carve out for sales and use taxes, and there is a de minimis provision.
Let's see here. We'll get it. There it is. Is that what you're talking about, Ken?
I mean, like I said, now it goes up a little. Let's see, it goes up. It's 194C. Keep going up. There's the remedies. Wait a minute. Yeah, keep going up. I think we're almost there. Sorry, guys.
No, you're good. Awards to Qui Tam plaintiff.
There we go. Tax. Keep going up a little bit more. There you go. C. Go up. You were there for it. Now go down a little bit. You were at it before.
Okay.
Sorry, it's in there.
There it is.
Okay, notwithstanding this, there's Qui Tam, and well, like I said, there is a carve out for there's a carve out for the sales taxes.
Got it. And I can hunt that down.
Yeah.
I'll find where it is specifically. That
No,
one.
it is. It's 189 4A. I'll just read it for you. This section shall apply to claims, records, and statements made under the tax law only if net income or sales of the person the action brought against equals $1 million for the taxable year. The damages pleaded in the action exceed $350,000. Okay, and then you've got to violate some of these, some of the subdivisions of the section. Okay, so New York's got that one provision, and again, it's 189 4A that has the sales use tax carve out.
Yeah, and that is, I mean, to me, one of the things that's really interesting in this kind of scenario that we find pretty often is that when it comes to these types of Qui Tam provisions or these kind of things, they slip these sales tax laws into it. Majority of the entire document is focused and centered towards income tax or centered towards other components. And yet there's this one tiny section, this entire document, that now extends it over to the sales as well, and then creates that level of complexity. So it's right. They love, devil's in the details when it comes to sales tax.
Right. Okay. All right. And then, you've got the DC Act. You've got more Qui Tam actions. Okay. And guys, we've gone through a year and a half where state revenues have been diverted to social benefit and coffers are dry. Okay. Let's talk reality. There's two things that are going to happen. The audit activity over the next 18 to 36 months is going to be unbelievable. And two, you're going to find states stretching the laws or interpretations, trying to keep up. And the other thing to remember is that in 2018, Wayfair happened. So yeah, they've talked about economic presence with sales and use taxes, but 86-272 is still out there. And it makes no sense. And 86-272 is the federal income tax provision for states that say you got to be there for 14 days over a year. And it's only in it, if you don't and you're selling goods, you don't have to file. So that required a physical presence test. That was written in the 50s. Okay, businesses have changed. With that in mind, every state is going to stretch economic nexus to its absolute limit. And Steve, would you agree?
I would agree. And what I want to ask on behalf of some of our clients is, do we anticipate economic nexus thresholds to be lowered even more so than they already have been?
I think they ultimately will. I think we are going to go. I think we're going to go into almost an EU type issue. Okay. I also do VAT, which is, again, I'm really, I call myself a nerd. I'm a geek and a nerd. The thresholds are $30,000 for most EU countries. Once you do a remote sale of, your total is over 30,000 bucks, you could be in the UK selling into France at 30,000 and 0.01 pennies. You got to start charging French VAT on that remote sale.
And you are a VAT expert, Ken.
Sorry. Like I said, if we're looking, and there's 150 plus countries that have a VAT, that's probably the easiest to manage and commonality. I mean, they've got 26 plus countries in the EU operating under a general set of directives. Okay. It makes no sense why we don't do it within this country, because we've now done away with physical presence for sales and use taxes. And I think there are states already challenging physical presence under 86-272. And I think that's the next one to come up in this SCOTUS has put itself into a corner. And there's no way, in my humble, unlegal, opinion, that they're going to withhold, they're going to hold at income tax still requires a physical presence on the sale of goods.
I completely agree with you, Ken. I mean, just to kind of give some examples, and you'll hear old Dave Chappelle term, cold-blooded. If you look at this bottom line here, this is the state of New York, Qui Tam, going after metropolitan preschools, over $4.3 million. Preschools they're going after here. I mean, is nobody protected from this thing?
No. And honestly, like I said, in the only state where there's, like I said, a carve out or a de minimis threshold is New York that I know of. Okay. And the one thing about state taxation, nobody wants to be, except New York or Massachusetts, wants to be the first one through the door. Okay. To expand or be seen as increasing taxes. But once the first one gets through, the others will follow. Okay. And let me stop here for just a second. We've covered Qui Tam and the risks and how easily it can be tripped. But I think there's something here that, and I mentioned it early on, is that there is another level of fear for me. Okay. And it goes back to sort of the genesis is that Allen v. AT&T. Okay. You can start a Qui Tam. And listen, I make no bones about it. Professional services are, lawyers, guys like me who are, the accounting nerds or whatever. I mean, they're looking for potential. If we've got law firms filing Qui Tams on behalf of themselves, okay, that tells you something that monkey see, monkey do. A revenue stream is a revenue stream is a revenue stream. Okay. Not only are people going to be looking at Qui Tam, but get into a situation where you've got an overcharge. Okay. You've been overcharged at a local rate. Guess what? If you've done it enough times, you're going to get sucked up into a class action suit because it makes no sense. If I was a law firm, I'd be looking at the people bringing Qui Tams who've been overcharged because I'm going to come right behind it with a class action lawsuit, then a civil action going against the company that overcharged the tax. So you could get whacked twice. Okay. And that's, go ahead.
I'm a nice guy. I don't know any better. I've never, I don't know anything about sales tax. And let's say I accidentally didn't take care of California. Can you claim ignorance?
No, ignorance, unfortunately, or even misunderstanding is not a viable defense. And let me be even clearer, because it's actually in one of the cases, I believe. It's in Keene. There's a Keene v. Walmart. If you go back, there's a Sears Roebuck case behind it. You can't call the Department of Revenue and get an answer and base an audit defense or Qui Tam on that at all. Okay. Something verbally given to a taxpayer, Stephen, you took phone calls from taxpayers.
Sure did.
Right? But here's the thing. They are now accepting email answers as written, or written support for a particular position if it came from the Department of Revenue. So I would highly advise that if you are into a situation where you are unsure and you can't find someone that you can trust, okay, from a professional services side, but that professional services side is going to get an answer, but before they give you the answer, they're going to get it in writing, okay?
Yeah.
That is the only way to protect yourself in an indirect tax situation and even in an income tax situation. I mean, just, I'm focusing on income or indirect taxes here, but never, never, never change or do anything based on a verbal response until you have it in writing.
Should always have it in writing. Absolutely.
And,
Okay.
Ken, that reminds me, because some people will say, well, this is unfair, to us as a regular retailer. I have a story of an individual who actually represented a religious group that got slapped by California for an audit, and they were a nonprofit religious group. Approached the state and said, look, these guys don't have any money. They're doing this for the right cause. They want to be good. You know, they want to get this thing straightened up. The state said, we don't care. They owe us money.
Right. I defended a religious group here in Georgia that had a retreat, and they tried to make hotel taxes on a retreat because the retreat was being funded by contributions given at the church level. Okay. It's just, look, guys, I'm not kidding you. The cost to appeal, just a sales tax audit, getting it all the way through the first court, could be upwards of $250,000 in legal fees.
Yeah. Okay.
A Qui Tam defense is different because it's going to be so much more. Okay. It's a ridiculous value. And let's put it to you this way. It is so important to the attorneys that they get paid out of this. The king of Qui Tam actually went to the Illinois Supreme Court. He went all the way to the Supreme Court of Illinois to try and get his fees on a certain case. In My Pillow. Okay. Now, My Pillow ran into the same problems, and they got hit in Illinois, they got hit in New York under Qui Tams because they recklessly, sorry, I'm giving air quotes, let me get to the camera. They recklessly disregarded the sales and use tax laws by doing phone and internet sales. Okay. And like I said, Illinois has been doing Qui Tam on sales taxes since 2001. They've tried to throttle them down a little bit, especially on the king, but they're still there. They're still active, okay? And it's not going to go away anytime soon. It's simply not, because not only does the state get money, but the AG's office gets money out of the settlement.
I think
okay? Why is the AG's office? Go ahead.
Sorry. No, I was going to say, I think on that case with My Pillow, the Mr. Diamond walked away with, was it $600,000 on the $1 million settlement?
Yeah, it was a lot. He tried to get 600. He tried to get legal fees and the Qui Tam for the relative. Okay. Yep. And the U.S. Supreme Court said you can't do that. You can only get one. Pick one, right?
Yeah.
Just pick one.
Unbelievable. I mean, so, which also shows how, you know, how scrappy they are and how willing they're going to go after every single penny available. Right. So kind of going back into here. And so I kind of want to get a couple states online, and then let's get into the Q&A portion, if that's okay with you, Ken.
Yep.
So, you know, where we have some concerns right now are Michigan isn't very far off from getting FCA on the tax side.
Michigan is so broke. I did a stint at Ford managing global VAT for them, and they had a refund case that had been, you know, they won a lot of money. State never gave them the money back, just refused. Ford had to take the state to the Supreme Court of Michigan to make them pay their refund. Okay, that's how broke they are. So if there is a revenue stream to be had, and Qui Tams, okay, and I will defer to the legal people on this call as to, you know, the level of certainty and what rises to sufficient evidence as to a reckless conduct has occurred. But I don't, you know, the thresholds probably are not that high, okay? For a sales tax law, it's called prima facie. You know, what's the prima facie? Has the state made its argument? That evidentiary level is very, very low. Okay, it's extremely low in my opinion. So like I said, you've got to know what you're doing. And again, as states move forward with these things, as states look at, you know, e-com in general, and knowing there is no, you know, because the one thing that Wayfair did not do, which right, angered everybody. They did not set the threshold. They concurred that, North Dakota, right?
Yep.
Sorry, whatever. I'm having a brain freeze there.
No. I can pick up on that one. I know where you're going with that. and that
right,
is.
So it was $100,000, right?
Mm-hmm. Well, it was, what is it, 100,000? And most of the states on average do 100,000 for the economic side, or 200 transactions over a calendar year, either or.
Right.
And to that degree, I completely agree with you, Ken. They left that door wide open for the states. They gave them carte blanche on this one. And of course, some states have done fairly. California, 500,000 versus 100,000. But other ones, you look at Washington, at one point, it was only a $10,000 threshold back a couple of years ago, which anyone and everyone would have triggered in their sleep.
Right.
And so, of course, then one question that comes into play in all this is that if that is the case, and they are going to go after this, do we see at some point in the future perhaps a reducing of the de minimis threshold for economic nexus downward to aggregate more people?
It absolutely has to happen, because the rich states or the high volume states are always going to get their nut. Okay. They're always going to trip that 100,000 threshold. The other states that don't have, right, and they're losing industrial bases, they're losing other economic streams, right? Everybody's working remotely. I mean, the real concern is what COVID has done to the commercial real property on office space, because guess where most of your kids' school taxes come from? Property taxes.
Mm-hmm.
Those rents are going to be knocked down. It's a real mess in the next, we're going to see the real decline. And Peter, we saw it even last. Yeah. Geez, this is the end of, they were already popping up. Dallas, Houston, some Texas counties were already upping the property tax rates because the valuations were going to plummet. Okay. And I don't see any other way for cities, counties, rural counties, small populations to continue to sustain a level of acceptable service without having severely low thresholds for economic nexus. And that's both in sales and income tax.
Yeah. And to me, what's kind of disheartening from this, I mean, Michigan, Arkansas are on deck. And so as a byproduct of it, besides the fact that I have the wrong date up there in the middle, I suspect, and I could be wrong on this one, Ken, that you're going to see, from the case studies that we've seen from New York thus far in Illinois, the amount of revenue, I think they calculated New York since 2013's $500 million in revenue they've been able to recoup through Qui Tams. States pay attention to the bottom line number. They look at those numbers because that's all they care about. And so, what I think is going to happen, and we kind of started to begin to see mid to late 2020, we began to start to see the war drums being banged by the states. We started to see policy changes. To give you an example, as a matter of fact, right here on my desk is an 81-page bill on Florida Marketplace Facilitator and their new laws. And in that bill, they slip all kinds of little side policies and everything else there that, you don't know unless you actually read the full 80 some odd pages to find it.
Oh, and that reminds me, sorry guys, we got off kilter there a little bit. The King case in Illinois started as a Qui Tam. When it got to the Supreme Court of Illinois, guess what? They changed the sales tax law on account of a Qui Tam action.
Mm-hmm.
Okay.
Mm-hmm.
All of a sudden, Illinois, as long as that, and I was an auditor, as long as that shipping charge was separately stated and it wasn't shipping and handling, because shipping and handling was always viewed as an upcharge, a profit center. If it just said shipping, we left it alone. It wasn't taxable. Illinois Supreme Court, Keene started as Walmart.com, wrong rate or something, right? And what it ended up being was that the Illinois Supreme Court saw that the delivery charge for .coms could not be separated from the purchase of the item.
Yep.
You couldn't separately negotiate the delivery charge. Therefore, unless you could pick it up, right? A delivery charge on e-com is now taxable. And that's effective August 9, 2009, somewhere around in there, okay? Again, this is what can happen.
And one question, just to jump to a couple of those that we're seeing here, and I think I answered two of them with one fell swoop. So an individual saying, well, if you're already collecting and remitting sales tax to the states, you know, what does this mean for them? And I think to answer this one simply, the simple answer.
AT&T is the answer.
Yeah.
AT&T is the answer. Okay.
Yeah.
It does not protect you. This is why I you know, if I could pound my fist to emphasize this, the problem is going to lie within the local rate charge, or and it's two things. It's sourcing where the tax is due, right? It's either at point of sale, brick and mortar, or destination, right? Where the brick and mortar is located, or where the order is accepted. Or states say, nope, it's where the item is ultimately delivered. Okay. And guess what? You know, all of a sudden DoorDash is delivering everybody's food. They could trip and fall into a separate taxing jurisdiction. And when the jurisdiction is a destination, the restaurant has charged the wrong tax. And they could be overcharged. You know, hooligans could have a Qui Tam action brought against it in California, in Illinois, right?
And so I think what I'm hearing there from you, Ken, is you're saying, you know, there's the exposure of proper tax rates, and most of these individuals, in most cases, are using marketplace facilitators. So the beauty to some of that is, if I understand correctly, it doesn't remove the burden from the retailer. If the state wanted to, they could still go after, even though the marketplace was collecting and remitting in your behalf. Is that accurate?
You could get caught up, okay? And look, anybody can be sued, okay? That's the reality. It's still going to cost, even if you're ultimately held harmless, you're going to have to pay somebody to make the argument you should be held harmless.
Yeah.
If you get wrapped up, somebody's going to have to go to court and file a summary judgment that, you know, hey, look, these guys were third parties and had nothing to do with it, had no obligation to charge, collect, or remit. They should be dropped from the suit. Somebody's still going to have to pay for that. You're not going to do it on your own.
So Ken, the $1 million question with regard to that then is, how do these small businesses protect themselves?
And again, I started the marketplace facilitators, like I said, the big boys, wallet.com, Home Depot, Lowe's, you know, Amazon, they're using high-end accepted rate engines is what we call, right? They're using the right taxability software on these things that it's about the best money can buy, okay? And unfortunately, there is not a rate engine in existence that is 100% accurate on local rates. It isn't. It's that impossible. They've even gotten one, I think it's CCH, has a sub or something that actually puts the rate based on the rooftop of the location where the item is delivered. Okay, that sounds great. Let me give you an example. At Intercontinental Hotels, I had a hotel around the Atlanta airport that half the hotel was in one county, the other half was in another county. I had two different taxes based on where you slept that night. Okay. Yeah.
And we saw that, Peter, you and I discussed that similarly with the Gap, the retail clothing store, the Gap in Valley Fair Mall, San Jose, or actually Santa Clara, California.
Oh,
where
tell the story, please.
Where exactly right through that store, separating two registers. One register would have one sales tax rate, and the other register would have a different sales tax rate. So it happens.
Well, and again, not to try and say, stay up nights worrying about this for the rest of your life. Okay. You have some general, it's the best it's going to be. Okay. And then I hate to say it, but in this society we live in the US, anybody can be sued for anything. Okay. The best argument you can be made, and again, it's that recklessly engaged. Did you recklessly engage in a behavior that puts you at risk of missing the right rate? If you're using Amazon as your tax calculator, and Amazon, I think you got a leg to stand on. Okay, it's meeting, and again, I kind of posted out to the legal community. What's that standard? How high is that standard? That should offer you the appropriate protection. Okay, and I try to put this aside. But if you're using not a world-renowned sales tax engine on your own website sales, okay, you could be in trouble. Okay, and I would push very hard to have them explain, especially where there's a local imposition. How do they calculate and how do they round? How do they round the numbers to get to the total tax due, and when there is a local provision and a state provision? Because that is where you're going to trip up.
Ken, I'm a little Halian, and I'm always looking for loopholes and workarounds to problems and all that other fun stuff. There is a clawback provision. What I'll say is and you drop the trail of breadcrumbs there in these software solutions where they are liable for the rates. Usually contractually, if you read your agreement with an Avalara or other solution of that nature, they say that they will cover up to the amount that you've paid using their platform in damages in most cases, but it will not exceed.
What if it's treble damages?
Yep.
A Qui Tam is treble damages.
Yep.
Okay.
So
I'm sorry. That's why these Qui Tams, and I love New York's. I hate New York's for professional reasons and personal reasons, but I love the fact they had the common sense to do a carve out to protect small businesses. Right. That's the sanest way for these FCA provisions to be applied to indirect taxes, in my view.
That makes sense. Steve, you want to go on to the next question?
We have a question here from David. Are marketplaces such as Amazon handling retailers' occupation tax in Illinois as of January 1st, 2021?
Here comes the rot one, Ken.
Here's the rot.
Well, it's and Peter, I may defer to you on this one to lead in. In a marketplace environment where the state has passed a marketplace law, okay, the provision is that unless you hit a threshold otherwise, okay, if you're just selling through a marketplace, okay, those sales are covered by the marketplace facilitator. They are supposed to be charging, collecting, and remitting. Sales that you do via other distribution channels, either your own website or some co-op or anything else, telephone orders, right? You're on your own there, okay? And you have to pay attention because that's when the threshold calculator starts ticking again, okay? It's on a high volume, small price audit, 200 transactions goes by very, very quickly. Okay. But they should be charging ROT if they're in a marketplace environment. Okay. And that should cover all your marketplace sales. Okay. But
now,
from a Qui Tam sorry, go ahead.
I was going to say, but Ken, okay. So I get that. So Amazon's on the hook as a marketplace facilitator. What if I have a Shopify store or big commerce store that's not considered a marketplace? Does that have any application then?
No, you're on your own. You fall and again, I'm trying to say you fall under the economic nexus provisions of that destination state. So what is it, 100 grand, 200 transactions, something like that, right? Once you trip that trigger, you're on, okay? And you're on until you don't trip the trigger.
Right.
But I would highly recommend, as a tax professional at one point at United Technologies, having 18,000 returns filed every year. Once you're registered, just keep filing, okay? Because the on-off will, and Stephen will practice that, that's going to trigger an audit, okay? You're going to get audited if you keep going on-off. States don't like that. They're going to figure out why.
Interesting. So in other words, you can't just, I mean, you don't want to, in other words, if we're looking at loopholes here, you don't want to register, get all your backcode in, deregister, then a year later re-register, get the backcode in, so on and so forth, as a way to kind of manipulate the system.
Right. You got that issue, and then you have the fact that, okay, for the calendar year, I hit 200 transactions in May. So everything from May forward to the end of the year, I had to charge tax on. You're going to have to continue to charge tax until the next calendar year and calculate how many transactions you had. If you had less than 200, you can, in fact, then deregister and wait until the next time in a calendar year you hit that threshold. Don't do that. Just stay with it. Okay. For the whatever it costs to file a return, it's worth every dime. Okay, because they'd rather see a zero return every now and then versus on-off. That sets there are analytics set into the selection process. I know I wrote them in Illinois that if you do something like that, you're triggering an audit, at least a desk audit. Okay.
So Ken, then, I mean, I guess the question is, if I were a retailer, this seems like I'm getting bullied here and taking advantage in this current environment. Why doesn't the state just go after Amazon in one fell swoop?
Because they can. Ultimately, they can. And states don't advertise. They say they don't, but they look at audits on a revenue per hour generation. Okay. So if I had to spend 100 hours in an audit that got, $2,000, I'm not going to audit that guy again. I may not audit that type of business again. But if I hit home runs time and time again, I'm going to just cover that particular NAICS with as many audits as I can pull. Okay. And that's the reality. If they're making money and it's an acceptable revenue per hour provision or at rate, they're going to keep auditing. It's just the way it is.
Would a Qui Tam, though, be inclined to try to go after Amazon?
That's a great question.
Again, it's that reckless behavior. What is reckless behavior? Amazon for years fought being in that, fought the nexus, even though they had a distribution center and 5,000 employees in the state. Now, because they're registered everywhere, I don't think Amazon would be a prime target unless they really messed up a sales tax local rate or a taxability item. Now, understand, and I know this because I know this, vitamins and stuff that may or may not be health related medicine, they don't have enough classifications open to do it 100% right. Okay.
Yeah.
They don't.
Yeah.
Anybody in a large company knows there's a point where there's a diminishing return. Your marginal cost is so ridiculous, it's not worth it. Okay. It's simply not worth it. You call the ball and you move on. Okay. Again, that's why I'm saying test your product.
Well, and I know, I mean, from a categorization perspective, from some of our battles with certain states like Florida and such, we had to go back and look at, contracts. We had to go back and look, how they're contracting with third-party entities in the state. We had to go back and look
Right.
at the labeling of and packaging of said supplement to make sure that it fit each state's definition of what a supplement is.
Right.
And then, I mean, you know, we can even look at, as an example, outside of supplement candy, when you got flour-based candy bars versus non-flour-based candy bars, you know,
Right.
and they have different rates. So it's
Right. Well, you got the edible, right? The chocolate dipped,
yeah,
fresh fruit. One's food, one's candy. Well, how do you how do you tax it, right? Steven's laughing. He knows. I mean, that's a state going, yep, I'm gonna tax all that.
yeah.
And you got to prove that it's otherwise.
And then the other thing I'll say there, I mean, I think popcorn is one of the most complex ones to deal with. You know, if you're packaging it or it's pre-packaged versus you're making it on the spot at a movie theater versus, you know,
Right.
all these other things, it's just what a categorization, you know. And so let's just say, take a hypothetical. You sold popcorn, the client takes it out, doesn't use it, doesn't eat it in the environment. What does that mean then? What does that make for it from a sales tax perspective?
Again, and this is where we go back to sourcing, right? If you've got the right tax rate and the right tax charge based on the sourcing rules of the state you're selling into, then you're okay. Okay, you're okay. Where you're going to have problems is that you've missed the sourcing rule or that the local rate is the wrong one. That's where Qui Tams really start to bite you. Or the e-com giant that's saying, up yours, I don't have Nexus.
Yeah, yeah. Well, it's the 10,000-pound gorilla, right, Ken? I mean, it's one of those things that when you start to line up, when these two entities start to line up, you see the state getting their teams together and you see the corporate, you look at what Amazon's going to throw behind it from a legal perspective.
Amazon had to go to court to fight a subpoena in Massachusetts to turn over their client list, or not the client list, their third party, their FDAs.
Yep.
Guess what? They lost. They lost.
Ken, did they really put that much of an effort though in that case? I mean, I looked at some of the reading on that, and
there's not a real viable defense to it. It's in the code that once you get, because this isn't protected data, it's privileged. I mean, Amazon, the best, and I take my hat to them, that's still the best defense I've ever seen in a sales tax case, is when they argued First Amendment against one of the Carolinas, and they won.
South Carolina, as a matter of fact.
South Carolina wanted to know all the books and records that are like books, reading books that were being shipped into South Carolina. And instead of fighting based on Texas laws, they fought on First Amendment rights, and they won.
Yeah. And I mean, that's the perk, for the small businesses to understand. That's the perk that Amazon brings to the table. When a state knows it's about to go after Amazon, they line up everything behind the scenes. They don't let Amazon know a thing. And then they try to sideswipe them as hard as they can and whiplash them. But these legal teams are so trained for this kind of combat that when they try to whipsaw them, they're well prepared and they have such an extensive team. They just continue to take it, to the mat, if you would. And they just continue to drive the state downward because they have sufficient revenue and capabilities.
Well, and I'll say this as former inside and outside guy. Okay. I want to be in compliance from sales tax. From a sales tax perspective, it doesn't cost me anything if I'm right. Okay. Right. And an audit doesn't cost me anything, because the reality is, if I screw up something that's a sales tax issue, I'm not going to go back to my customer and say, oh, by the way, you owe me sales tax. Here's my bill.
Yeah.
It doesn't happen. So it costs me money. It is to my advantage to be as right as possible from a sales tax collection basis. Okay. The legal teams get into the other side when you potentially can get stuff bought tax-free and use it in your business. Okay. That's where the sales tax cases have really, those are always the real fun arguments.
Yep. So the next question here, let's go to, says, let's see here.
The next one we have from Kristen.
Yeah.
is how do small businesses cover the cost of just filing state sales tax? I'm sorry, excuse me. How do small businesses cover the cost of just filing state sales tax filings and yearly state income tax filings?
The state sales tax, at least, most of them will give you a collection discount or a small amount of a fixed fee, $10, $25. Back in the day, Walmart was making almost $1 million a month in their collection discount in Texas. Okay, they were making $1 million a month
just because they're on location in Texas.
The volumes and the amounts of money their collection discount had no cap.
Yep.
And that's the only thing I can say is, and I apologize for that. That's the reality of small business. And I think if you take a step back and realize what your business is, not a small business. You're not a mom and pop sitting on Main Street selling widgets in one location. You are an international business. You can sell all over the world. Okay. That is, once you step over that line, unfortunately, there are costs of compliance. My budget for FTEs, full-time equivalents, was almost $3 to $5 million just for payroll and benefits. In some of my locations I've been a director at. That's how much we were spending just on people.
Yeah.
Not the software. Not including a whole lot of other stuff. But to take advantage of the collection discount is absolutely critical. File that sucker on time. So if you get $25 back and your filing fee is 29, 39 bucks, okay, you're out 14 to 15 bucks, right? And that you kind of take that as a win. You had over half the cost filed covered. For the income tax, I hate this. I am so afraid of what SCOTUS will do on an 86-272 push.
Yes.
Okay?
Yeah.
Because if that happens, a small business who has sales in all 50 states could have just the cost of compliance, whether or not you paid a dime a tax, could be $25,000. Those income tax returns are going to be $500 a piece.
Wow. But
right?
Ken, aren't the income tax returns going to be offset? In other words, as a pass-through entity with the state, aren't you going to offset what your income will be from, let's just say, I am in California and now Pennsylvania is enacting these income components, well, or they're at least trying to enforce it. Wouldn't it be an offset at that point?
It's only an offset in your home state, your state of domicile. Okay. Right. What happens is that you get a credit for any income tax legally due and payable in another state. So let's say your income tax liability for your state of domicile was $5,000, but you had to pay Pennsylvania. You owed Pennsylvania $1,000. Well, you get to deduct the $1,000 you owe Pennsylvania, dollar for dollar. So you pay your domicile $4,000 and you pay Pennsylvania $1,000. Okay, but the real cost is the cost of compliance. I don't know how we're going to knock down that price because income tax preparation, while simplistic, the software to do it is very, very expensive. Okay, and your local, your local CPA is not going to be able to do it. I mean, Steve, what do you think? I mean, a local CPA filing 48 or 40 state income tax returns, do you trust that?
No,
it's far too high.
It would be, for me, it would come down to, and I've evaluated this a couple times in our scenario. To me, it would come down to, the technology can keep up with it. But if you're just a small firm, you don't have the resources or the technology that can handle it, then you're going to charge up the wazoo just because you're uncomfortable with it, and you're charging more because you're going to have to go figure it out. Good.
No, and to answer your question, and I apologize, we went off course there a little bit. I would look at, I do an order of precedent. Okay, I really would. Right now, you have something called 86272 de minimis protection. Okay, it is in effect for you.
Yes.
Okay, it requires a physical presence in the state before you have to file. Okay, I would look at, and when you get into Amazon, you have problems because you got inventory everywhere. Okay, so I would look at your big destination states: California, Texas, Florida, New York, Illinois, or New Jersey. Peter, I mean,
Yeah.
you're more into the numbers.
Yeah, New Jersey, Pennsylvania is a big one too because of Philadelphia and Pittsburgh. They have some big cities over there, or some other ones that typically recently have been getting expensive.
I would focus my attention to those first. Okay, the small ones are going to have to come find you. Okay, and until you don't have 86272 de minimis protection, don't file. If you don't have inventory there, and you make, if you don't have inventory there, I wouldn't file. Or if they send you a notice you got to file a zero return with 86272 de minimis protection. Send. You can do that yourself.
Even there, Ken, though, there's complexity to that, because in certain states they say, well, you're completely shielded and protected from reporting or doing anything. If we look at Texas from a marketplace facilitator perspective,
Right.
But then you have other states that just say, no, you have to incorporate, you have to include, etc.
Well, New Jersey requires an LLC filing every year, even though you're out of state. Right?
Yeah.
And that's $500,000 if you don't do it.
Yeah. Yep. No, go ahead.
No, I'm done. And really, like I said, I think the most direct advice is to look at your big states. And I still think that even if, look at the volume, right?
Mm-hmm.
And here's the thing. You get to deduct from that sale, say you've got $1 million of sales in California. Well, your cost associated, and that's everything you can deduct, you apportion it. So if you had $5 million in sales total, $1 million of it went to California, right? And so 20% of your total costs go against the $1 million sale, $1 million of sales in California. So if your COGS is 60%, right? Boom, right there, you're down to 400,000. You don't have to pay on $1 million. You pay on what your final net is, right? What your net income is. And you just apportion that based on a sales volume. Okay.
I would add one thing for the small business response piece. At the end of the day, it's all about mitigating risk. It's a numbers game. When you take certain actions, your percentages or likelihood of being identified or even being worth being identified can go down. So one thing is that even if in the event, for example, because I don't want to deter people from collecting or remitting with the state, even if in the event you got popped by a Qui Tam, even though you've been collecting and remitting this entire time, the delta would be whatever the difference was against what you collected in that kind of environment. So now you're looking at much smaller amounts in that situation. So there is a benefit to proactively attacking this head on. It removes, if I were a Qui Tam as a hypothetical, and if I were in their shoes, I'd be looking for the easiest money, low hanging fruit I can. Right. If small businesses is going to be easy, then I'm going to look to how I can do it in mass. And if I can identify, some way to find a certain quantity of businesses that are not doing it all together, that's going to be my first priority. If business is collecting the sales tax, then I want to see what their bottom line revenue is, and is there wiggle room here to get something out of it?
You've gotten it, and I think I can kind of sum this one up. Okay.
Mm-hmm.
The best way, as a guy who, I was paid, almost $1 billion a year in transactional taxes. Okay. Yeah. The one thing you can do is that if you have done your due diligence, right? And Amazon, the only way you're selling is Amazon, that's about as good as it's going to get. Okay, I think you would get a pass that you recklessly, again, air quotes, everybody see my air quotes, recklessly engaged in a business, right? You didn't. If you are using a Shopify, or if you are using another, another channel for your distribution, you need to see, right? You need to check and see, are these rates right? And I think the one way to do it, and I hate to add any kind of cost to you guys, because I've owned my small business. Okay, business is, I know what it's like. It's a hustle. Okay, but I'll put it down to a value proposition. How many days a week or how many days a month would you spend trying to stay on top of it? And you calculate those hours to, okay, what if I spent those hours looking for additional revenue, additional inventory, additional revenue generation? There's a delta, okay? And get somebody, I don't care who it is, get somebody who knows what they're doing, for timing's sake, okay? Don't rely on a local CPA in a multi-state taxation issue. You are going to get the wrong answer. Mm-hmm. Guaranteed.
Seen it a million times, Ken. Seen it a million times. And the CPA tries to defend their actions like, well, I just didn't think. And like, well, you're still on the hook for that advice. Right. And so, it doesn't matter. The next one that kind of comes into mind, and I don't know if we can answer this now. I might have to get back to this one individual. You don't recall off the top of your head, Ken, the First Amendment case in South Carolina?
Oh, golly. It was in the mid 2000s. I'd have to go look. I'm sorry. Yeah. But
I know
that was I know the next time I saw Gary, I just high-fived him. I said, dude, that is the best thing. Gary Benson, the global director of indirect taxes at Amazon. I saw Gary at an IPT event. I slapped his hand. I said, that is the best argument I have ever seen in my life. That was beautiful. Sorry.
Well, and if I recall the history of it, it was originally that Amazon had negotiated with the state to get tax incentives. And then in a later time, the state realized how much money they're bleeding out on that sales tax front and said, we're going to change our mind on all this. And we're going to...
No. What they wanted to do, they wanted to put a DC in there and then defer Nexus for 5 years.
Yeah. Yep. Yeah.
Okay. So, and then they did the calc and they said, well, no, maybe we'll go after the use tax on individuals.
Yeah. And that I recall, they stood firm against Amazon on that one. So I'm not sure what the outcome of that case was. I have to go back and look. Next
Amazon won.
Oh, they
didn't have to give it. They did not have to give it. So, like I said, best case ever in sales tax. I love that kind of thinking. All right, next question.
So the final one that we have left from the group is, with Pennsylvania and California are the two that are actively pursuing sellers for income taxes. So I think that's more of a statement, PA and CA are the two. So I, from an income tax perspective, what is your big offender list, Ken, state-wise? Like we know Pennsylvania has been changing that because back in 2017-18 we saw the VDA process and they required income filings for some of our clients. But where are we starting to see this begin to broaden with the states?
They're going to wait till they get to a SCOTUS situation, I think, before everybody jumps on board.
So this is Quill Wayfair all over again, in other words.
It's going to be Wayfair. Okay, and we're going up a Wayfair decision based on the validity of 86272 in a modern e-com environment.
Yeah. I mean,
I'm sorry, 86, like I said, 86272. You can look under it's P.L 86-272. Okay, you can Google it; it'll pull it up, and that'll tell you what income tax nexus looks like for state income tax.
Yeah.
Okay.
And I think from my experience here, Ken, if it copies or replicates what we've seen before from prior states when it came to the sales tax front, going back to 2015, 2016, really where Colorado started to assert challenges that they tried to get pushed up the ladder. I think that, what people have to be cognizant of is that there may not be legal, jurisprudence in the sense of compelling the income tax today from a federal perspective, but we have to also understand, where are they trending, where are they going to go? It's like, history only remembers the victors of war. In this environment, same thing. You can be of an opinion. Good.
Right. And guys, look, this is all controlled by the Commerce Clause of the U.S. Constitution. Okay. Only Congress can regulate the business between the various states. Okay. PL 86-272 was a federal intervention in the 50s, because this is post-war. We had a bit of a recession when all the soldiers came back. We had to find jobs. All the states were trying to attack every sale coming into their state, and the federal government stepped in and said, nope, states, you can't do that. We're going to pass a federal law. This is it. You can't get behind it. Okay. So it's either going to go to SCOTUS, or there's going to be enough pressure brought to bear on Congress to step up and try and fix it themselves. Because SCOTUS has said again and again and again, Congress, fix this. Every post-Quill case to Wayfair, every Nexus case that came up, SCOTUS kept saying, please, God, Congress, fix this. And 26 years later, they didn't. And so SCOTUS fixed it. Okay.
And, so what I would say kind of in closing notes, and Ken, I'd like to get your opinion on this one as well, is that, from my...
I'm sorry. Did I see one more question pop in? Did one more question pop?
Oh, maybe, yeah. Let me check here. I think it may have popped through on the chat side.
No, I think that was just
okay.
I think that was just Matthew in chat.
Gotcha.
Okay.
Cool.
Okay.
Yeah.
Go ahead.
But Ken, I do also have another question for you before we do close. When you're ready.
Okay. Go ahead.
All right. Well,
I'm ready.
One of the questions that we did have roll through email that we didn't address yet. It's a very interesting question, and I think it's touching upon constitutionality. Is this a misuse of public funds if whistleblowers are being rewarded with a cut of this money? Should that not be funds that should be used for state purposes?
Well, here's the answer. They treble the damages. That's the answer. So you're not paying what's actually due. You're paying 3 times what is actually due. Therefore, it's a fine you're getting paid out of.
I see.
That's my interpretation.
So they increased it to account for it, in other words.
Gotcha.
Other costs, right? Because some's got to go to the AG office, some has got to go to the whistleblower, some's got to go to professional fees, and so that's why they treble the damages.
Interesting. That makes sense.
And if you look at the My Pillow case specifically, that you'll see then the offset costs, and then the Qui Tam got popped because they went well above their legal fees. But if you look at it, it was an aggregate of fees from the legal team, from the state, actual tax owed, court fees, etc.
Right. Okay.
Well, let's see here. Do we have any other questions? We'll give it maybe just another minute or two if anybody has anything else to add, anything else that they'd like to know. Me personally, I would like to know, is there a certain percentage that that we're aware of that whistleblowers are awarded, or is this basically a state by state, they decide as they go sort of thing?
It's a general rule. Okay. And if you look at, again, go back to, that's why I put 3 states on there. I wanted you guys to be able to compare, contrast New York, Illinois, California, where we know, Illinois and New York, we know it's hot and heavy. California has, if you look at their statute, compare it to Illinois, you're saying, oh my God. Okay. Seriously. It's the same one. They don't carve out sales tax. They don't put a de minimis value on it. But you'll see within each one of those, who's due what. And it's generally, if the state steps in, the amount going to the whistleblower themselves drops, right? If the state declines and whistleblower goes ahead and is victorious, then they get a bigger chunk. Okay. But they stay in that range. I haven't seen anything more than 50%. Okay. But it's generally 33%. And then if the state steps in, they say 15 to 25, but generally it's 25.
Mm.
Okay. That's a pretty substantial amount if you think about it.
It is. Well, like I said, it's a phenomenal tool of enforcement, but it's an abused tool of enforcement.
I agree.
Okay.
So,
Well,
so in that case, then, if you're awarded a cut of the revenue that they've captured through Qui Tams, is that subject to state and federal income tax?
Because I believe it's a penalty. Okay. Penalties are, and gosh, penalties are generally subject to income tax. Okay. So it's like damages, right? You get your medical bills paid for in a car accident, right? And that could be $1.5 million because you got smashed. If you get another $5 million in damages, that's a penalty. That becomes income generally. And it'll go state by state, but I think the Fed treatment is, it would be subject to income tax. You don't get to walk away free on that one.
And that's good to know for any of you out there that are thinking about blowing the whistle on anybody.
And if anybody's got one, my number's here. No.
Well, and kind of to make sure we get credit where due, Ken, I know you're starting to dabble in certain other industries, and we want to make sure that you get recognition for that. First and foremost, I'd like to personally thank you for coming today on this and sharing some of your insight. And Ken, I know that you're starting to work in specific industries. If you want to share a little plug there about what you're doing too.
Well, and guys, I've been trying to retire for the last 5 or 6 years, and Peter keeps sucking me back into stuff. He brings me these little tidbits, and then I start looking, and then I get angry. I am professionally offended, and it is on the conflict between federal and state law on medical marijuana. Now, let me explain. I have had 20 orthopedic surgeries, and I need 2 more this summer. I'm not kidding. I've had 20 surgeries. So pain is a pretty regular portion of my life. I understand, okay, and the need for broadening it. But what has happened is because there's the federal conflict, the people getting into the business are prohibited effectively from getting any kind of real support services from people who, like me, do indirect taxes or income taxes, or even, there's some wiggle room with potentially setting up or handling certain aspects of an incorporation from a medical marijuana center, grower or retailer. But I'm scared. There's been some news stories that California has asked for more budget and more people, and they are going to start auditing the medical marijuana dispensaries this year. And best guess, Peter, I think that 50 to 60% of the businesses will get an assessment so god awful they will lose their business.
I agree with that.
And believe it or not, it has to do with local sourcing. Guys, they've got a mess. California allows you to deliver pot to somebody's house. Okay. And if it's in your own truck, your own car, you just put Nexus to the destination. Okay. It's a horrid, that's what's really scaring me about the Qui Tam law, is that not only are these guys going to get hammered under the regular audits, Qui Tam issues are going to pop up because they could go to a lower rate. They could be overcharged. Okay. Now, the people smoking dope, are they going to be sophisticated enough to understand what's happened? Probably not. Do they care? Probably not. But again, there's somebody trolling, and the king of Qui Tam will open up an LA office and just go crazy. Okay. That's the reality. And, you know, my hope, I mean, let's put it to you this way. It's a cash business. You cannot write a check to them. You cannot swipe a credit card. You cannot swipe a debit card. You don't have a bank, an FDIC bank you can use because it's a federal issue. You can't use it. Okay. Where's the money? And Stephen, I don't know if you ever had the amazing opportunity to do a cash business audit. Oh my goodness. I can walk in and say, I don't believe any of this. I'm going to triple your sales. Here's your audit liability. See you at court. And I pretty much hit my prima facie case. I did. I hit my prima facie level of, you know, support for that audit liability to stand. Okay. How are they going to audit this? There's nothing. If they're gonna audit it like a cash business, then, you know, when we would do bars and grills or, you know, alcohol in Illinois, you knew where they bought their beer and hard liquor from because you could only buy from certain distributors. So before we started the audit, we would go to the distributors and get their inventory purchase, and then we'd look what's on hand and what they reported. You know, you break out, you deduct spillage and, you know, other little issues, and then if they don't match, I just tax you on the rest. That's it. It's that simple. Okay. And they don't even have good software in there. I don't think the point of sale software is sufficient to handle the multi-jurisdictional issues you're having on an intra-state sale. And in case you can't tell, I could talk for this for the rest of my life. I love this, but I'm offended. These guys are sitting there holding the bucket. They have no idea how bad it's going to be. They don't.
I completely agree. And Ken, thank you so much for your time there. And Ken, what we'll do is we'll also have your contact info for anybody that is interested in entering CBD cannabis space. Ken's around. Just let us know. We'll get you in touch with him from our side. Okay. Stephen, I'm good on this one, but I can't thank you enough.
Well, thank you again for joining us today, Ken. As Peter said, you know, your insight has been absolutely invaluable, and I'm sure that many of our viewers are taking everything that you're saying very, very seriously because it's on the horizon. It's on the horizon.
Right. And guys, again, this has been recorded, and go to Peter if right, Peter.
Yep. It's been recording this entire time.
Well, thank you very much for having me, guys. I appreciate it.
Thank you, Ken. And for everybody out there that joined us today, thank you for joining us. We appreciate your time. For everybody else that is watching the recording, well, this is up on YouTube. Our Ampersand Accounting YouTube channel will be uploading this video so you can rewind it back and replay all of the good details and insight and information that's been presented to you today. So if you have questions, feel free to send them over to support@ampersandaccounting.com, or you can reach us at 800-931-0994. Thank you very much, everybody. Have a great weekend.
Thank you.